Review of Mitsubishi Estate's fiscal year 2024 full-year financial results, covering the period from April 2024 to March 2025. Mitsubishi Estate Co., also known as Mitsubishi Jisho, is one of Japan's largest real estate developers. As a core member of the Mitsubishi Group, the company is well known for its ownership, development, and management of major commercial properties, particularly in central Tokyo's Marunouchi Business District. Financial overview. In fiscal year 2024, Mitsubishi Estate delivered outstanding results, achieving a record-high operating profit of 309.2 billion yen, an increase of 30.6 billion yen year-on-year, and a net profit of 189.3 billion yen, up 20.9 billion yen. ROE, return on equity, improved to 7.6%, exceeding the initial forecast of 7.2%. This strong performance was driven by robust gains in domestic offices, outlet malls, and hotels, contributing to both income and capital growth. Office leasing remained solid, supported by rising rent revisions and a low vacancy rate of just 1.73% in Marunouchi as of March 31, 2025. For fiscal year 2025, Mitsubishi Estate is forecasting another record year, with operating profit expected to reach a new all-time high of 325 billion yen and net profit to grow to 195 billion yen, marking the fifth consecutive year of record earnings. ROE is projected to rise further to around 8%, reflecting steady progress toward the company's long-term 10% target. In terms of shareholder returns, the company paid a dividend of 43 yen per share in fiscal year 2024 and plans to increase this to 46 yen in fiscal year 2025. Mitsubishi Estate aims to continue annual dividend growth of 3 yen per share through fiscal year 2030. Additionally, it has announced a 100 billion yen share buyback in fiscal year 2025, with all repurchased shares to be retired. Mitsubishi Jisho also targets a 50% reduction in strategic holding stocks by fiscal year 2027. In fiscal year 2024, Mitsubishi Estate posted record operating profit of 309.2 billion yen, an increase of 11%, with revenue rising to 1,579.8 billion yen. Strong results came from offices, outlet malls, and hotels, along with higher capital gains. The Marunouchi area remained solid despite some building closures. The residential business benefited from condo sales and asset sales, while the international business saw fewer gains due to delayed property sales. Investment management rebounded and profits grew in design and real estate services from higher fee income. In fiscal year 2025, Mitsubishi Estate expects operating revenue to rise to 1,850 billion yen and operating profit to hit a record 325 billion yen. Growth is driven by strong hotel and retail performance, higher condo profits, and increased capital gains overseas. Some headwinds include fewer domestic capital gains and redevelopment-related closures. Net profit is forecast at 195 billion yen, an increase of 5% year-on-year, a fifth consecutive record, with a dividend increase to 46 yen per share. Interest-bearing debt. Total debt rose by 200.4 billion yen to 3,338.6 billion yen. Of this, 83.3% is at fixed rates and 94% is long-term. Debt is mainly yen-denominated, with 766.4 billion yen in foreign currencies. The company retains a strong credit rating, and the average maturity is 6.6 years, ensuring stable financing. If the Bank of Japan raises interest rates in the future, it would be a disadvantage for real estate companies. Although Mitsubishi Estate's debt has increased, it is mainly long-term and fixed rate, and the company has strong credit ratings, so its financial position remains stable for now. Commercial property business. Mitsubishi Estate works on office development, leasing, and property management in cities outside the Marunouchi area. It also runs logistics facilities under the Logicross name, operates Royal Park hotels across Japan, and has started managing private airports. In retail, the company develops shopping centers and outlet malls in big cities. In fiscal year 2024, this business earned 124.6 billion yen in profit, 64 billion yen from rent, 51 billion yen from selling properties, and 9.6 billion yen from management fees. The company owns over 1 trillion yen in assets here, with a strong return of around 7%. Marunouchi Property Business. This segment handles offices in the Otemachi, Marunouchi, and Yurakucho areas, which are prime locations in central Tokyo. Mitsubishi Estate focuses on raising the area's overall value through careful development and coordinated management. As of March 2025, office vacancy in Marunouchi was just 1.73%, showing strong demand. Out of 35 planned buildings, 19 have already been redeveloped under the Marunouchi Next plan. Key projects include Torch Tower and Tokiwabashi Tower. In fiscal year 2024, this business earned 96.1 billion yen in profit from office rent and related services. Residential business. Mitsubishi Estate develops and sells condos under the Park House brand and manages rental apartments under the Parkabio. As of March 2025, it had sold 16,870 condo units and operated 143 rental buildings, with a strong gross profit margin of 28.6%. In fiscal year 2024, the residential business earned 48 billion yen, 27 billion yen from condo sales, 18 billion yen from selling rental apartments, and 3 billion yen from other income. Key projects are located in central cities like Osaka and Yokohama. International business. The company develops and leases offices in the US, UK, and cities across Asia and Oceania. It uses a mixed investment strategy, focusing on logistics and rental apartments in the US, office leasing in the US and Europe, and condo sales in Asia. In fiscal year 2024, the business earned 45.8 billion yen, 26 billion yen from rent, 8 billion yen from condo sales, 6 billion yen from asset sales, and 5.8 billion yen from other sources. Mitsubishi Estate aims for smart global investment with a good balance between return and risk. Investment management business. Mitsubishi Estate runs asset management companies in Japan, the US, Europe, and Asia. It manages money for more than 650 investors in 25 countries. Assets under management grew from 3.1 trillion yen in 2020 to 6.1 trillion yen by March 2025. In fiscal year 2024, this segment made 11.9 billion yen in profit, mainly from management fees. The company plans to keep growing this business to serve a wide range of investor needs around the world. Long-term management plan, 2030. Mitsubishi Estate aims to grow its business profit to over 400 billion yen by fiscal year 2030. Business profit has been steadily increasing from 240.9 billion yen in fiscal year 2019 to a projected 325.3 billion yen in fiscal year 2025. This growth comes from domestic assets, international assets, and non-asset businesses. While each category has had ups and downs, overall progress is strong. The company plans to boost profits further by reducing reliance on asset-heavy investments and increasing income from services. Mitsubishi Estate follows a progressive dividend policy, aiming to raise the dividend by 3 yen per share annually. For fiscal year 2025, the dividend is set at 46 yen per share, supported by stable rental income from key assets like Marunouchi properties, outlet malls, and major overseas buildings. Growth from new projects such as Torch Tower will further support this. Mitsubishi Estate also adopts a flexible share buyback strategy. For fiscal year 2025, it plans a 100 billion yen buyback and may add more depending on share price and cash flow. This aligns with efforts to boost returns through asset sales and reduce strategic holding stocks. The base buyback level is around 50 billion yen per year. A new target aims to cut strategic holding stocks by over 50% by fiscal year 2027. Since fiscal year 2022, these holdings have already been reduced by more than 30%, with proceeds going to buybacks and unlocking hidden value. The long-term goal is to fully eliminate them in principle. From fiscal year 2010 to fiscal year 2025, profit has steadily grown, reaching 195 billion yen in fiscal year 2025, with dividends per share rising from 12 yen to 46 yen. The company introduced the 3 yen annual increase policy in fiscal year 2024, reinforcing its commitment to shareholder returns. Over the last 7 years, Mitsubishi Estate has executed 380 billion yen in share buybacks. In fiscal year 2025, another 100 billion yen is planned. The total return ratio has consistently exceeded 50%, sometimes topping 90%, highlighting a strong focus on capital efficiency and shareholder value. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 2,698 yen as of June 9th, and the US dollar stock price is $18.59 as of June 6th. Due to real estate market conditions in the US and concerns over interest rate hikes in Japan, the stock price had temporarily declined, but as the company's performance remains strong, the stock is now on an upward trend again. The current PBR is 1.31, and the PER is 17.2, with a dividend yield of 1.70%. Compared to the past few years, the PBR, PER, and dividend yield suggest that the stock is now relatively overvalued as the share price has risen. Conclusion. Mitsubishi Estate delivered record profits in fiscal year 2024, and fiscal year 2025 is expected to mark the 5th consecutive year of record earnings. Mitsubishi Estate is also enhancing shareholder returns through dividend increases, large-scale share buybacks, and a clear commitment to reducing cross-shareholdings. Mitsubishi Estate is well positioned for further improvement in the years ahead.